Good morning, everyone. Thank you for coming. Going to be running through some of the things that we're seeing in the market at the moment, more around alternative payment methods and the evolution to more kind of card-based things. Agenda set out, we'll talk a little bit about sort of DCB and some of the challenges that we're seeing at the moment. We'll then look at some of the trends and some of the alternatives that we're seeing today and how they're kind of growing within the market. We'll then touch a little bit more about how that's moving into the kind of evolution of reoccurring payments, and then touch on that how we're working with some of the people in the room here and a lot of the people with the conference of optimizing that and addressing that global expansion, helping them become more wider in what they accept. And then we'll touch on a little bit about specifically how we feel that we're helping some of the others in the market. So for me, can you guys see there? Am I in the way? I'll come stand over here. You look at some of the challenges that you see within DCB at the minute. I think everyone kind of echoes with this. Chatting to a lot of people this week, and they're seeing a lot of the sort of things in here. And I won't go into each individual one because they're probably very relevant to what you're seeing. But I think a lot of the combination of this is starting to limit some of the growth and some of the existence of what we're seeing. You then start to couple that with kind of what's happened in the market and the evolution and probably over the last 10, 20 years around mobile growth and e-commerce. And for me, you look back, I think PayPal were one of those pioneers where changed the way that payments were taken, starts to look at being more of a mobile-centric and non-payment rails related kind of processing transaction. The key bit for me is the first iPhone in 2005, and we were chatting about it earlier, saying, do you think Apple actually envisioned that it would become a payment device in 20 years? Probably not, but it's evolved and they've accepted how that's working with the consumers today. Obviously, then you had Android, and then the pinnacle bit around the launch of Apple Pay, both as an online and a physical presence. So it's kind of going on there. Obviously, then you look at, and we'll cover a bit more on the panel later, around sort of the merging of Android Pay into Google Wallet. No longer just became a payment method, became more than that. So these wallets are starting to hold ID. They hold your flight information. It's becoming more than just that payment engagement method. Next bit you look at specifically in Europe is SCA, which is secure cardholder authentication, which was driven by PSD2. So the regulation of how we're trying to manage and operate that. And you mentioned that really because it drove the acceptance of some of the other digital wallets in its masses. And we'll touch on that a little bit later about what that means and how that's using and some of the challenges that happen with that, and then obviously how the wallets kind of overdid that. To the point of now where it's estimated this year that 44% of all retail sales are going to be done through a mobile device, which is phenomenal really in the growth to say that the device didn't exist probably 19 years ago. So it is a changing world of mobile commerce. You'll see here, look, I'll kind of run through whilst I'm talking of the different methods. These are live customers. We've taken out the sort of the name, so it's kind of a mock-up company. But this is how the engagement has changed. It's gone from physically pulling out your card, typing it in, to literally a one tick, one click on your phone, authenticating via your face, your biometrics, straight through to checkout. And that, for me, is super powerful, and you're starting to see that how the world is changing into that as well. You look at the new generation, and I look at my kids and my daughters, they don't even really know what a card is. It's all done on their phones. They're all managing that, and I think the stats were saying that, if you look at Gen Z now, 75% of them make at least one digital wallet payment every week. And that's insane, really, when you start to look at it. It's completely changed the way that we operate. You also start to look at how the wallets are starting to dominate and really starting to penetrate. So in 2022, Apple Pay, anyone guess how much volume they processed through Apple Pay? And Son will be quiet because you know the answer. Any guesses? 6 trillion. Put that into comparison that Visa did 10 trillion. They're bigger than MasterCard already, and they're not even a scheme. Google did 1 trillion in their own right. So the scale of it already is starting to say, well, actually, and they're just using the payment rails at the moment. So the scale of it is phenomenal of how it's kind of moving through. We also look at how other payments, so it's not just about the wallets. I think we've seen an evolution of how you integrate, how people are doing stuff. So when you look at Celeris and what we do, we're enabling merchants to take payments through e-commerce and mobile channels. And there's lots of different ways you can do that. So we've started to say the early journeys were hosted payments, redirects. Now we're starting to see the hosted fields, which is giving you full control over how you integrate, what you do. We give you the technology, and you build your pages how you want to improve that. It's all about customer experience. And I think that's the key piece here when we start to look at that. It's all about how the consumer wants to pay, how they want to engage, how they want to make their payments. And if I look to myself, if Apple Pay's not there, and I'm a solid Apple user, as you can see, Apple, iPad and iPhone, I will drop out and I'll go somewhere else. More often than not, I'll end up on Amazon because it's a one-click checkout. But if I'm new to a website, if Apple Pay's not there, I'll drop off. So it's also that acquisition tool as well, which is super important to driving growth through businesses as well. So as you see it as a wider piece, some bits there. So 5.5 billion, give or take, credit debit cards in the world at the moment, but there's 7 billion smartphones. So it's a huge world, and you look at the challenges that comes with operating a business that is multi-region, multi-currency, multi-payment type. It starts to become really, really complex. So where we've come through at Celeris and what we're looking here is we're providing that technology layer that helps you address and understand all those, helps you have that trusted partner that really understands how it's kind of going through. I'll restart that again so we can kind of run it through. And you know, we've had some really interesting conversations here already this week. And things about, and a name there, Stripe, is they make it super easy to integrate and get onto. But you're finding a lot of people are, they'll get going and then they change their mind. And they'll say, do you know what, I can't support your business anymore. We're not sure on the business model. And therefore, you've done that work and it stops. So where our approach is coming to be is to start to look at a wide range of banking partners and technology and APMs to ensure that we bring the right partners to the table that enable you to get consistency in your business. Okay, that might take a little bit longer and can sometimes be a little bit more complex, but once you know you've got that, yes, we like your business, we like your model, you're able to scale at the right rate rather than that start-stop process, which often you're finding with some of the others and things like that as well. The other thing I'm big kind of fan of, and I think what's kind of coming up at the moment, if you go back 15 years ago and said, who does subscriptions? Who has a reoccurring card payment? Most people would go, no, I don't do it. Now you look at it, and I go through my bank statement, and all of those have come off my bank statement. So they're all reoccurring payments, all reoccurring card payments. So the biggest businesses in the world, it used to be seen as the insurance. It was a dirty way to do it. You couldn't stop the renewal. Now it gives you full control over it. You can start, you can stop, you can have flexible schedules. It can be daily, it can be weekly, whatever it is. And things like Netflix and additional services as well, like account updater, which is something which allows you to keep the latest card on file for that customer. So if you look at Netflix, I happened to lose my wallet a while ago. Before I'd even got the new card in the post, Netflix had updated my account with the latest card details, and therefore the consistency of subscription continued through, which, if you look at it, is huge. So how much does it cost you if a subscription stops? What do you have to do? I have to send an email, phone the client, engage with them. Some research I did in the UK market probably 5-6 years ago said on average, that was between 70 and 100 pounds worth of cost just to get that person back into that subscription model again. Huge loss, and that's if you are able to recover them. So there's lots of tools now that allow you to do that. The market's evolving. The schemes are very much on board and seeing this as well. So not only can you use Apple and Google Pay for it, you can enter them straight into that subscription model and continue the billing, even to the point now where a recent introduction of some of the further technologies where based on the response that comes back from an attempted card payment, it might be that they say, do you know what, try a lower amount, and you can build that into the models. So say that you might, rather than keep on going and going and saying, right, I've got no money, and okay, we're quite good at technology, but we can't put money in people's banks, is, okay, there might be a lesser amount. So you might want to take that as a strategy at the last thing of the month. Do we try a lesser amount to ensure that we recognize something for the subscription or not? Or do you then move on to terminate and suspend the customer? So lots of interesting ways to do it, lots of flexibility for that as well. So really, really interesting part of the world at the moment and see things going. Then you kind of go to the flip side, and this is always the challenge, fraud. Where things grow, the fraudsters come into. And it's always been a challenge in payments, and I see some familiar faces that have probably been in the industry as long as I have. And it kind of goes around. You look at what PSD2 brought back in 2021. For those that you don't know, SCA was a kind of a two-factor authentication process. It was something about something you have, something you are, or something you know. So something you have. I have the card, I have the number, the PAN, or I have a password. Something you are, it's me, my fingerprint, my biometrics, or something you know, that's a password or a PIN code and things like that. You need two of those to successfully authenticate. The launch of SCA was quite a challenge. So you looked across Europe, actually you saw basket abandonment drive down probably 40%. A lot of it was driven by bank issuers and clunky bank experience, waiting for a text message to arrive, logging into a payment app on your phone, all very clunky. So actually, yes, it drove down fraud. Probably to date, you're probably seeing a reduction of 25 to 30% of fraud in general across the market. But also it saw abandonment. Then you had people flocking to the schemes, to the Apple Pays and the Google Pays, which then saw actually conversion in certain instances up by 300% because it became so simple, so easy, so engaging. You became used to doing it. And it's one of those, once you've done it once, it's trusted. The nice bit again, I think, is, and where they've done so well and where it's going to happen is it uses the card rails. So ultimately, this is a customer engagement method rather than a specific transaction itself. And you're still protected by consumer protection, chargebacks, fraud, things like that. So there is that level of trust that exists still through that network. But this has superly simplified it. And actually, if you get down to the geeky tech side, there's up to 200 different data points that are sent per transaction in that verification. So it's really securing that and ensuring that the money that flows through the business, actually you get to keep rather than people coming out and saying, that wasn't me. It's very hard to contest an Apple or Google Pay clearly authenticated transaction. Couple that with some of the other things that are coming through. So looking at fraud tools and things like now. So look, there's a lot of machine learning, AI, and things like that coming on now, which are probably the best uses for this type of technology and that we're seeing. So machine learning, huge application for it now, where you're looking at massive trenches of data and able to do big data analysis of payment trends and things, and come up with a score of, will this be fraudulent or not? Those sorts of things have really changed and really start to help things. The next sort of evolution and what we're working quite closely, and we're a Visa partner and their innovator program, is something called network tokens. And again, it's you actually start to tokenize and secure the transaction data at a scheme level. And already it's starting to come into Europe. We're seeing a big penetration in the US as well. And that's driving, again, down further fraud. They reckon average around the moment for early tests about 7-8%. But again, also acceptance, because again, it keeps that latest card number on file, keeps things updated to ensure that, especially in the subscription world, you're maximizing that opportunity to collection of funds, which is what it all is all about, really, is making sure that you get rewarded for the benefits. as with all this, and actually come some really interesting chats yesterday, where we're finding people are managing a lot of this stuff themselves, have got different relationships, they've come on a journey. It's actually how do you bring all that together? And the reporting side is one of those things that is the most boring. No one really enjoys it, but also is that most important. So part of what we do is we bring all of that data back into consolidated reporting. So you have one view to look at your customer. You have one view to look at all of your payment data. You have one place to look at your fraud and your chargebacks and things like that, which is super important. And yeah, great, we've got the customer experience side, but if you can't make it add up at the back end and bring it to life and make sure it's easy for your finance friends across the business, then it's really going to be a pain. And yeah, often overlooked, but also the most important thing. And again, this is all, everything you see that we do, we offer through API, so you can integrate all your systems to it, or it's replicated through our portal. So if you want to handhold, and you can do hybrids of that. So some of it you can API, some of you don't. Full reporting API to pull that data out. So yeah, really, really exciting at the moment. So look, our approach really, and I kind of conclude here really, is it's that we're trying to make that complex simple. We're ultimately a technology business that is gluing all of the complexity together into a single solution. We're seeing some real success with some of the alternative methods to DCB and how that's growing. I think the deployment and integrations of some of the wallets is super important. It's all about customer experience, all about making it easy, but also then it's all about making sure that you manage those appropriate risks and things. So the way we see ourselves is that optimization partner, that technology partner of choice to be the glue to bring all that together. And likewise, we have customers and partners in this room, and we ensure that ultimately we're ensuring that you're able to do business. Your customers are able to engage and transact in the methods that they want to do business with you guys, and make that all happen simply and easily. So that's it. I open the floor to any questions. Anyone's got anything? If anyone wants to talk a bit longer, we're up at booth 22. Feel free to come up and have a chat with anyone of the team.